Hello and welcome. My name is Aaron, and thanks for swinging by the Auto Trading channel. I apologize for the lack of videos last week, but me and my family came down with the flu. Luckily, with that being behind us, we are back on track to posting 2 videos for y'all each and almost every week. Now, this is TradingView Tuesdays, and this is episode 4. Our main focus here at Auto Trading is to dive deep into the code of automated trading strategies. Today, I'm going to show you exactly what the strategy tester is and how to use it. So, without further ado, let's dive into it. All right, as you can see, we are in TradingView. We're still on Tesla. I switched it to the 1-hour chart because that was a profitable one. And you can see that we still have our custom indicator, the Stoke D Strat, pulled up. And I'm going to show you guys how to get to the strategy tester. Well, it's pulled up. And then I'll show you what everything means. So last week, as we were working in the code, it's right here on Pine Editor. And whenever you click save, it will normally take you right here to the strategy tester. If this is not showing up for you, it might look like that. And so it's just down here, nestled at the bottom. Click on strategy tester and it will pull up. And it'll only show data in this section as long as you have a strategy applied to your chart. And so if you only have indicators, it might still look very similar to what I have going on my screen. But if it's not a strategy, let me click on the Pine Editor real quick. If it doesn't have the if statements with a strategy entry and exit rules, then this will just say no data. And so make sure you have a strategy pulled up, make sure it's saved, make sure it's applied to the chart, and just as we have here. And if you do that, you'll have access to all the data of all your trades. And so let's dive in to defining all of the different parameters. Okay, so you have 3 tabs in the strategy tester tab. So 3 subtabs. You have your overview tab, you have performance summary, and you have list of trades. So starting with the overview tab, you can see that we have this nice graph showing our profitable trades as they accumulate and our losing trades as they accumulate. And on this one, you can see that we started out right here. The account had $100,000 in it, and slowly with each of these movements, these are each of our profitable trades and some of our losing trades. But over time, this has had many more profitable trades than losing trades. And so we see it in the graph, and that's super helpful just to visually quickly see how it's doing. Also, if you notice here, this is 20 right here, then you have 40, and you have 60, and you have 80. That's the number of trades. And so we could look at our code and say, all right, we were steadily rising up to about 40, and then we had this drawdown between 40 and 60. And we can go into our list of trades over here, and we can actually see what time we were losing. We can go in and then identify maybe it was a downturn in the market, or maybe there's a lot more volatility then, or just many number of different possibilities. But then we see right here, well, look at this. This was some explosive growth between 60 and 80 trades. But then we also had it pull back some. And so it's useful to know that you can go in and see at what point was our strategy no longer profitable. And so that's what these lines are for. And it's a good reference point as well. Now moving from the left to the right here we have settings for the strategy itself. We also could set alerts from here. But moving left to right, we have our total, our net profit. And so this factors in the profitable trades, the losing trades, also your brokerage fees, if you have any slippage, anything factored into your strategy, it all adds and subtracts to give you actually what your profit will be. Because many times, especially if you're doing a high frequency strategy, your strategy might be profitable until you factor in your commissions. And then once you factor in commissions, it's no longer profitable. And so this will give you your net profit if you truly made money or not. Moving on, we have total closed trades. That's pretty simple. During our testing period, we had 90 long and short trades combined. Percent profitable, this says 46.67, so that means that just a little bit less than half of the time we are profitable. Now the next one though shows that our profit factor is at 2.141. And so if that was at a 1.0, that would be break even. And so we have done a little bit better than doubled our losing trades. And so it's profit divided by loss, and in turn we doubled. Our max drawdown shows this is kind of how much equity you need to have in your account because it lost $160 at its worst. And so that's good to know, just to make sure that you can stay liquid in your trades. The next one is your average trade. And what this is, you take your net profit divided by the total closed trades, and you have your average trade. And so on average, we made $8.14 with every single trade that we did. And then lastly, it says average number of bars per trade. And that's pretty simple. Like from this one right here, we got in and you have all of these days, each of those are bars. And so it just averaged it out, and we are on the hourly chart. And so we could say that we averaged being in a trade for 117 hours for each trade. Okay, moving on to the second tab, the performance summary. I'll try to quickly go through these. Some of these we already went over. There's a few of them. Let's see, I might not know quite all of these, but here we go. Net profit, we went over that. This is your actual take-home amount from trading, obviously before taxes and whatnot. Your gross profit, this is the maximum amount that we made on our profitable trades, and then we have our gross loss below it, which is the exact opposite. Additionally, moving over, these are all the trades that we went long. These are all the trades we went short. And so you can do the breakdown and see, well, maybe my strategy only makes money whenever we go long. And then you can take that data, that understanding of that, and go into your strategy and just nix doing any short trades. Let's see, moving down, our max drawdown, we just went over that. And this is the max amount that one of the losing trades suffered. And so you could be safe, probably doubling that. So if you had about $300 in this account with this strategy on top of what you needed to place the trade. And so if we were buying one share, no, looks like we were, then we were buying one share at a time. This says two because it had to close a short, and then it bought one, and then it had to sell one to break even, and then sell another one. So it was one at a time. And so you need about $1,000 to make the purchase, but then probably if you doubled this. And so if you had $1,300 in the account, then you would be golden to trade this strategy, more or less. The buy and hold return, I had to search this one and find out exactly when it considered the starting, and it's at the starting of your strategy. So it's not necessarily at the starting of your chart, because sometimes a chart can go back many years, but it's from the start date and the last trade that's been made. And what this shows you is how much you would have made if you would have just bought one share and held it. Now, the 2,309% return sounds amazing, but that's because our chart goes back for quite a ways. But it's good to know, because if you have your strategy set to trade for a certain period of time and you find out that it's better to have just bought and held it than what your strategy did, then you know that your strategy is worthless. And so that's really, really useful to know. But the other side of that you need to be careful about is we don't know when there's going to be a big downturn in the market. And so if you bought it and it's gone up this year, then yeah, your buy and hold would have been good. But if it went down, then it might not have been. And so definitely good to understand that, but use it with a grain of salt. This Sharpe ratio, that has something to do with how well it performs against a non-risky security. So something like going to the bank and buying a CD, or I would think a mutual fund, something where you have a locked in set of returns. And just like the Sharpe ratio, the Sortino ratio is similar, is what I read, but it factors in volatility a little bit differently. Your profit factor we went over on the first tab. This is your right here, your gross profit divided by your gross loss, and that gives you your profit factor. Max contracts held. This shows that we're just trading one contract at a time. Our open profit or loss, and so this is saying, since this is an ongoing strategy, we have an open profit right now because it's white of 204.66. So this trade right here, if it were to close right now, then we'd have an extra $200. So that's good. Commissions paid, we did not add commissions or change our initial starting capital in the Pine editor last week. We definitely can, and I definitely think you should, but we haven't gone into those things quite just yet, but we will, don't worry. Total closed trades, we had 90 trades. We're showing that we had exactly 45 long trades and 45 short trades, which makes sense because we don't have any exit strategies built in. And so you're either always long or you're always short. So that makes sense that ours are identical. Total open trades, currently we just have one short trade right here. You can see it. Number of winning trades. And so you can see this is where our percent profitable showed that we were below 50% because we only had 42 winning trades and 48 losing trades. But our winning trades are larger. Thus, the total strategy has been profitable. So percent profitable, that is just 42 divided by 48. That gives us our percentage of winning trades. Let me go over here. And this is really interesting. This is a good one to note. And so right here it says that our long trades were 60% profitable, and our short trades were only 33% profitable. And so, we have been in an uptrend. If we added a moving average to kind of tell us what trend we were in, that might be a way to kind of mitigate some of these losses. Or this might just be a bullish strategy, and so we might want to turn it off whenever we are in a bearish market. That might be what this percent profitable is telling us. Our average trade is we made $8, and so again, our average long trade we made 20, average short trade we lost. So there you go. We probably want to turn off the short trades on this one if this was our strategy. And then our average winning trade was 32. Our average losing trade was negative 13. Our ratio of the average win and average loss. Let's see, our largest winning trade was 235. Our largest losing trade was 160. These are pretty self-explanatory here. But these average bars are another good thing to note. And so mainly on the winning versus the losing. And so what you can do sometimes, though, if your strategy might really make its money on letting the winners run, and so you might not want to kind of cut the trading bars short. But if you noticed that, let's say for most of your winning trades averaged, let's say it was below your losing trades. Let's say most these were reversed, right? And let's say most of your winning trades averaged the 81 bars, but most of your losing trades averaged the 159 bars. Then you would know, well, I should just stop my trades at 81 bars. And so that would be a good use of the average bars, winning and losing. And then we weren't doing anything with margin. We had hypothetical $100,000 in the account, and so we never had to use the bank or the broker's money for the trade. All right, now moving on to the third and final tab, list of trades. So on this one, this is really cool because it literally is a list of trades, when you got in, when you got out, at what price, and if it was profitable or not. And so something that you could use this for in conjunction with this first piece is, let's say, really at trade 40, we did not make much more. We just started losing from, I don't know, maybe 45 to 57. And so if it came to trades, let's scroll down and let's see, went too far. Okay, so 45, spot on, 45, loser, 52, then we had some winners, maybe 57, 59, right in there. And so what you could do is you could say, actually, I'll just do it real quick. Let's go to trade 40. Click 45. Actually, I'm going to zoom this out. Okay, now I'm going to click on 45. Okay, so we were moving sideways. I don't see much of a difference at 45, but then there is quite a big difference right here. Really turned bearish for us for a couple months. And so that would be a way to use the list of trades in conjunction with the overview to kind of spot, well, why did my strategy not work at this certain time? So that's a really cool feature. Right here, we're using one contract at a time. Profit, let me come back up to the top. So profit right here, it's just like the last tab we're in: white if it's profitable, red if it's not. Your cumulative profit, it just adds the profits or the losses of the strategy after closing the trade, and just kind of keeps adding that. Now the run up and the drawdown, I wasn't specifically sure on what those meant, so I had to check those out. The run up is the maximum possible profit of that trade according to our strategy, as well as a max percentage gain. And then kind of in a counter to that, the drawdown is a maximum possible loss of the trade according to the strategy, and then similarly as well as a maximum percentage loss. And one last thing, I actually did not know this was there before starting to record this video, but on each of these tabs, whichever one you're on, you have this question mark right here. If you click on it, it basically gives you all the information from this video, which is great if you ever need to reference that. So there you have it, my fellow Automates. That is TradingView's strategy tester and all about it. And in 2 days, on Thursday, I will show you how to do the exact same thing, but in TradeStation. Now, with all that being said, to whomever, whenever, and however this finds you, I hope that it finds you well, and I hope to see you again soon.